Hey there everybody, it's Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, April 16th, 2019, and we are now in the final hour of the market. So anyway, I hope everyone's doing well. Thank you so much for tuning in, and we're going to go over my current positions, and then we're going to look for some setups today. But as always, let me go ahead and do the legal disclaimer first. We'll get that out of the way. So hold tight. We'll be right back.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, now that we got that out of the way, as always, I'm going to go over, first of all, my current positions, tell you why I got in them, where we're looking to take some profits, where we're looking to get out, so forth. So first off, IWM, which is the Russell 2000, I purchased this here on April 11th at 157.03. Currently we're at 157.65, and I have been able to, I think I scaled out, yeah, we scaled out only about 12% on this trade. Today's an inside bar. This is my next profit target. So we'll see whether or not we hit the profit target today. My stop on this is going to be a close either below the 5-day moving average, which is right here, a close below there, or possibly the 10-day. But I don't like to get into a trade, get into the money, and then give some of it back. So I think if it closes under the 5, I'm probably going to call it and probably just take it and be happy that we locked in, we phased out of some profit up here. Next up is Coca-Cola. Entered that on the 9th of April at 46.63. I have phased out about 35% of the trades so far. Each day I phase out. You know, you can see we had some phase outs here, some here, some here. That's my phase out for today, but I don't know if we're going to make it. But we have made a higher high. We're keeping above the 5-day moving average. So as is right now, I'm going to be keeping that. If it were to close under the 5-day, I would consider just locking in profits, but we do have earnings coming up here on the 23rd of April. So regardless, I'm going to have to get out of that before earnings because they never hold through earnings. Next up is Lockheed. You can see I hit one profit target here today, 310.60. I entered that on the 11th of April at 305.57. Right now we're at 310.37. I have phased out along the way as I did today. This was about a 15% phase out. We have earnings coming up on the 23rd, so regardless of what happens, I'm gonna have to get it out of that before earnings. But we did make a higher high today, so there's nothing wrong with what this stock is doing right now. There's really nothing to do. So RSI is 61.32. If it starts getting up into the 70 range, I will go ahead and take that at that point if it fails at the 70. But right here would be the 70 RSI. So we definitely have some room still to move up. All right. So anyway, Lockheed Martin's moving up, which is nice. It's been a good trade so far. Nothing to do with this right now. We don't have to do anything with it. But keep it. Nike had another good day. Bought this here on the 12th of April when we broke back out over this range here and this fractal. Bought that on the 12th of April at 86.26. Right now it's at 87.77. You can see I did hit one profit target today, so I have been phasing the entire way out. Maybe we'll get lucky and we'll hit another profit target up here today. But again, making a higher high. It's not overbought. So yeah, there's nothing to do, so we won't do anything with it. We'll just keep tight. MACD's positive. So yeah, it's looking good. SPY, you know, yesterday I mentioned what I was doing with SPY. Let me see if I can show you this. But I've always been fascinated with this. So since 1993, had you bought the SPY in the morning and sold it in the afternoon at the close, you would have lost 5.2%, which is just fascinating to me, that all of the profit from 1993 came in the form of after hours trading. So conversely, if you would have bought it on the close, sold it the next day at the open, you would have made 568%. So I decided, you know, I decided I wanted to really test this, get an idea, see if it, what kind of results I got. And it's been fascinating. It's been very, very profitable. You can see I bought here yesterday at the close and sold right on the open for a nice profit today. So I've done it for about 34 trading days, have made a nice profit. You know, it's a short amount of data. We'll have to see how it works in the long term, but you know, that's what the numbers say, that most of the profit from the S&P since 1993 has come from overnight, the bidding up of the prices overnight. It's kind of strange buying it every day, just kind of regardless of where it is, but it's been profitable. It has been profitable, so I'm going to keep doing it. Yeah, so that's what we've got so far. It's a nice green day for me. So let's go ahead and take a look now and see if we have any possible setups for today. So Apple, you know, it's a 72.29 RSI. It's just too high for me to buy. You know, it's doing okay today. It's up $1, which is nice, but at these levels, it just doesn't give me a good risk to reward level. You know, 72 RSI, if I was in the trade, I would be holding it here, but I don't want to add at a 72 RSI. It doesn't mean it can't go higher, but the tendency is that it usually this is where it stalls out. Doesn't mean it's going to go down, doesn't mean it's going to crash, but as far as it keeping going here, I think the odds are against it rather than it continuing. So anyway, nothing here on Apple. If I were to buy Apple, I would want to see it maybe come back here into the value zone, and I consider the value zone 1 ATR away, 1 standard deviation away from the 20, either to the upside or the downside, but maybe right in here, something like this is where I would be interested in, and then having some kind of V1 or V2 entry to the upside. And speaking of, you know, I know I talk about V1s, V2s a lot, and let me just give you a good example here of what a V1 is. You see how we have this, see how we have the price moving up nicely, then we come down, then we move sideways. You see how these bars are moving sideways and getting smaller and smaller. Well, that is the kind of action that I like to see. And then you see how this bar washed out this previous low, washed out these lows, and then reversed back up and closed back above the close of the previous day. That is a V1. Essentially what's going on here is we broke to the downside, and then the market decided that there really weren't any sellers down there. People didn't really want to sell, and that's indicated by the fact that we tried to go down. This set off a bunch of stops right here, but it tried to go down and reversed, and it closed over the previous day's close on the day that it washed it out. So it has to wash out the prior bar and then reverse. That is a V1. And then let's take a look at a V2. Now a V2 is a little different, but the same concept. See how we move up here, then we move sideways, and then we have that same action where we take out the previous low. We really wash it out to the downside. People decided they really don't want to sell down there. There's not a lot of sellers, which to us is good information because we know there's not, it doesn't want to go down there. So if it doesn't want to go down there, most likely it's probably going to move the other way. But this is not a V1. You see, it did wash out this previous bar, but you see how it didn't close above? So that is not a V1, but this is a V2 where the next day it creates, it goes above, closes above the close of that first day. So a V1 has 2 bars involved. A V2 has 3 bars involved. But you know, the key point here is that we washed out the previous day's low and then reverse. It's a very, very strong pattern, and regardless of what kind of setups that I have, whether they're dip buys or momentum buys or moving average plays, V1, V2s are invaluable to triggering me into a trade. So with that said, you know, if Apple started to come down, bar started to narrow, we stabbed at the downside below that 20-day moving average and then reversed back with the V1 or a V2, that is what would get me interested in getting into a trade like this. But as of now, there's nothing there. Silver, you know, we're in a downtrend here. We found some support at the 3rd ATR channel, but there's really no trade here. Technically, this is a V2. You see how this bar washed out this bar, and now it is above the close of that first bar. Now, it doesn't mean that you just take any V1, V2. They've got to be in the greater context of some kind of setup. We do have a double bottom here. We do have some divergence, but not strong enough for me right here. Amgen, boy, it's really lost that 200. I got in here with the close above the 200, phased out about 55% up here, and then closed back, and then got out of the rest of the position here when it closed under 200. Ended up as a positive trade, but nothing going on with Amgen right here. Amazon, strong day today. Broke out of this previous high, 71.22 RSI. Nice day, strong day, but RSI is just too high. I like to buy somewhere between 50 and 60 to the upside with my target of a 70. But as of right now, it's great. Congratulations to anyone that's had this, but I wouldn't be a buyer here because if I had been buying down here, this is where I would start selling. So I wouldn't, if normally I'd be selling it here, I wouldn't be buying it here. But doesn't mean that's not going to continue to go up, but for me, it's just not a good risk to reward ratio. All right, what do we got here? We've got Boeing. Boeing had a nice, see this V2? See how this bar washed out this previous bar? And then this day here, close back above this close. That is a V2, and it's a good V2 because it happened at this 100-day moving average, which gives it more weight for me. But as of right now, I wouldn't be buying this. There's really no signals. Alibaba had a big day down yesterday. Today we've attempted a little bit of a rally about halfway of that bar, which is about normal. A lot of times when you get a big down bar, you'll have an attempted rally up to about 50% of that bar. Conversely, if you have a big up bar, you may come down about halfway and hold, which is bullish, but this is actually bearish when you have a big down bar like this, and then it reverses only to about halfway. So nothing on Alibaba. Caterpillar is having another nice day. Did break above here, which is positive. It's a 62 RSI. Yeah, I'm just not interested really. And the main reason why is that this third ATR channel, which it rejected last time, it had some problems with it there. Doesn't mean it's going to have problems there, but I think the tendency is that it would. And my risk to reward, you know, if I were to buy this right here, probably I would use a close below the 10-day as my stop. And if we get up here into this third ATR channel, that's probably where it's going to stop. So, you know, the risk to rewards, I'm risking more than potentially what I'm making to the upside. So it's just not a strong setup for me. It's not bad, but I'm picky. Canopy growth. Nothing here. I would be waiting for this to come down, close below the 200-day, close back above to give me a good reset, to give me a good risk to reward ratio. But there's not really a good risk to reward ratio right here. Dexcom, it's moving sideways, building a base. MACD did turn positive, but I would really, I would want to be patient with Dexcom and wait for a close back above the 200. That is what would be the signal for me, is a close back above the 200. Generally, when you're below the 200, it's not a good time to buy. I mean, there's times, you know, if you have a bottom, double bottom with a bullish divergence, something like that, low RSI for a quick counter trend trade, but for Dexcom right here, it's not really showing me anything. A close back above the 200 is what I need. eBay a few days ago had a big sell-off. You know, I don't really like getting involved with anything when you have a huge skyscraper in its recent past. I mean, we may rally back up to here, which would be, you know, close to the halfway of this big down bar, but my sense is once it got here, it probably turned back around here. ERX is kind of chop fest. ERX is the triple leveraged energy. In order for me to get involved in this, you know, maybe close below the 50, close back above the 50, ideally with the V1, V2 would be what I would be interested in. So right now it's just kind of in a range. It's not interesting. Etsy, again, big down bar. We attempted a rally at the 50%. Tried to go a little bit higher today, still at that 50%. I would wait for a close below the 50, close back above the 50, and then using that 50 as my initial close tight stop. All right, what do we have next? We have Facebook. This would have been a good buy here over the 200 when we close below, close back above. This is a good example where you close below, close back above, and then it closes back below for a very small loss. You know, this is a good setup because a penny below the 200-day, you just close for a loss. And then we have a nice close back above. We have a V1. You see this? So see how this bar washes out this previous low, then closes back above. So you could have got back in for another entry and it would have been a great trade. So the key here is if you buy above the 200 here, get out if you close below. You take a very, very small loss. But here, if it closed back again below the 200, you would have another small loss. But here we had a nice gain. So that's the key, you know, limit your losses and let your profits run. So I did take that trade now that I think of it, and I phased all the way out up until about here, and I got out on this reversal bar here. So I got the meat of the trade. But again, if you know, this is a great example of closing above your line in the sand, closing below, taking a small loss, not letting it run. If it would have gone down, you wouldn't have been in it, and then re-entering the trade here using a close below the 200 as your stop, your initial stop, and then it moving your way and letting it run and making a nice profit on that trade. But as it is right now at 69.21, It's having a problem with that 70 RSI and that third ATR channel. So the risk to reward is not good here. 5 below is a monster. This is one of those situations where we broke above the previous high. I would not have bought this here just because the RSI was too high and we were up near the third ATR channel. But in this case, it didn't matter. It's continuing up. It's a 70.96 RSI, which is pretty high. If I were in this trade, I would get out of this trade if we close below the 70 RSI. As long as it's above the 70 RSI, I'd keep it. But if it closed below, I would exit. That's my level, is the 70. So congratulations to anybody that has this. Good job. All right, so the Swiss franc, boy, is having a tough day today. Tough day. Yeah, had this one big strong bar and it just gave it all back. So, you know, if you were a big fan of the Swiss franc, you know, I would possibly be interested in this if it got down to a 30 RSI. Try to buy it as close to a 30 RSI as possible, and then if it closed below the 30 RSI, that would be my initial stop. But you know, let's say tomorrow it goes below 29 and then closes above 30. I would potentially buy that, but that doesn't mean it's the bottom, it's going up. That just means that we probably have a little bit of a counter rally that you could take advantage of, and probably the counter rally would be back up here to the 50 RSI or the 50-day moving average. So, you know, we'll watch this tomorrow. If I can get a close of like 30.25, that would be good, because then if I'm wrong and it continues down, then any close under 30, I'm out. But if it goes my way, then I have a nice asymmetrical trade where I have more upside than I have downside. Gold took it on the chin a little bit today. It lost that 100-day moving average, 37 RSI. If I were looking at gold, I would probably, the same as the Swiss franc, I would be looking for a buy close to the 30 RSI, or potentially a buy over the 100, close to the 100, and then using that 100 as my initial stop. So nothing on gold. Google's having a good day. 66.25 RSI, just generally too high for me. I would like to pull back, maybe back to the 20-day moving average with the V1, V2 entry to trigger me in. Ideally, waiting for it to get back to the 50, trying to buy it as close to the 50, using that as your initial stop. That would be really good, kind of a reset entry for me, a good risk to reward ratio. But as it is up here, it's just too high for me to buy. Goldman Sachs, you know, we had this break back above the 200, but we had the earnings the next day. So this is just a good example of do not gamble on earnings, because you would have bought here and you would have just got slammed. It's just a gamble. And again, here we have this big down bar. See how we have had this attempted rally? We're about halfway of this bar, and this big down bar was on a lot of volume. So I wouldn't be interested in Goldman Sachs. I'd have to have a nice clean break back above the 200-day, or possibly some kind of V1, V entry, rejection of the 50-day, move back up, or even possibly down here to the 100-day moving average, 30 ATR channel, or 30 RSI. Okay, give me 1 second. Boy, how about that? HCA. That is a tough putt, but if you had bought HCA over the 200, your signal would have been to have gotten out where? Under the 200. Bad things under the 200. I mean, yeah, you would have bought here, you'd have taken a small loss here, but you would have avoided this monster. And this is a monster. I mean, we're at the 6 ATR channel right now. We're under 30. You know, there's always some type of built-in support generally at a 30 RSI to the downside. There's buyers hanging out waiting down there, just like you've heard me talk about. I'm waiting for things to get close to the 30 to give me a good risk to reward ratio, but this is closed under the 30. That means all the 30 RSI buyers were not strong enough to keep this above 30. So this is a brutal day on HCA. This chart's broken. It's going to take some while to settle down. So we'll probably knock, boy, it's down 10%. That's a tough day. Biotech, I did buy biotech here on this break above the 200. I scaled out about 50–60%, scaled out some here, and then I got out of here again when it closed below the 200-day moving average. But it was a nice profitable trade, even though when I initially got out, it was lower than where I entered. But the reason I made money on it was because I scaled. That's why I like scaling. So if I were to look at IBB, the NASDAQ biotechnology ETF, I would at the very least want to see it close back above the 200. All right. Hey, Bruce. Bruce checked in with us. Thanks for coming in, Dr. J. Okay. Intel. Well, Intel's had a reversal bar here. It was up, oh boy, it was up pretty big earlier in the day, and it actually, I'm sure, got above 70 RSI, and then got rejected. So, you know, this is rejecting the third ATR channel. Yeah, this is a bit of a reversal day, and look at the volume. I don't know how well that bodes for the chips, but you know, that is not a good price action right there. And you know, we were talking about V1s, V2s. See how this is a V1 to the downside? See how it went higher and now it reversed, and currently it's right about even with yesterday's close. But I'm not going to short this because in general I don't short. I mean, sometimes I do, but in general I don't. You know, the market has a tendency to the upside, not to the downside. 3 out of 4 days are up over a long time. You know, those are the statistics. But yeah, that's not very positive right there. IWM, we talked about that. We have that. We bought that here. It's still in profit, still above. But if we were to close below, let's see, what is that? IWM. If we had to close below 157.19 today, I would probably just go ahead and lock in the phase outs that I got here, the profits here, and pretty much a scratch trade. But if it's going to close below the 5, I'll probably just go ahead and lock that in. Bruce wants to look at AMD. It's not bad. It's a V1. You see how we have this nice move upwards, the move sidewards, the stab down, and the currently we're above the close of this bar here. That's a V2. And we're at a 60.31 RSI. Yeah, good call, Bruce. Good call. Let me work that up real quick. As far as position sizing, so I can keep that on my radar. Okay, so that's AMD. All right. Yeah, thanks, Bruce. Thanks, Bruce, for pointing that out. So we'll take a look at that at the close of the market. Okay. Woo! Johnson & Johnson had earnings today, and it looks like it gave it all back. Boy, look at that. Dr. Alexander Elder talks about a kangaroo tail, and that is a kangaroo tail. Opens here, goes all the way up, and then closes right back at the bottom where it started. Yeah, that's not a great sign. I definitely would not be buying that here. Coca-Cola. We went over this earlier, bought that on the 9th of April. We had this close back above the 200, been phasing out here. Had a nice rejection today of this 10-day and reversed. So, you know, with any luck, maybe we can get up there another 19 cents, hit our first profit target. But anyway, it's been a good trade so far. Lockheed Martin, we went over this. I bought this when we closed back above this 200-day. We had this higher low, which means this low is higher than this low. Closed back above, and it's moved up nicely so far and hit the profit target here. So we currently do have this position. All right, so MasterCard, you know, it's just too high. It's here to 67 RSI. No V1s, V2s. Like I said, generally I like to buy between the 50-60 range of the RSI, and this doesn't fit. So let's keep moving. Okay, Altria. You know, we had this break back above the 200, which was good, and it had a good run here. I would like to see V1, V2 off of this 20-day moving average, or possibly another test of the 200. So nothing there. Merck. Well, look at that. You know, the RSI is 2698. If we had this stock at a 30 RSI at the same time it was at the 100-day moving average, that would be a great confluence of signals. But it's not. It's a 2691. Now tomorrow, if this were to close back above, assuming it's going to close below, but if it closed back above the 100-day moving average and at the same time retook the 30 RSI, that would be a really good trade that I would be interested in. So let's see what happens with that tomorrow. Close back above the 100 would most likely make this a close back above the 30 RSI as well. You know, let's look at Merck. I talked about this yesterday with triple screen trading, but if you look at this in 3 time frames, the monthly, the weekly, and the daily, if you look at the longest term here, the monthly, we're in a nice obvious uptrend, right? I mean, there's no doubt that's an uptrend. If we look at the intermediate term time frame, we've had a normal type of dip back into the value zone, kind of hanging right there at the 20-day moving average. So, you know, this is where you would expect a bounce, and I mean, it doesn't have to bounce, but if it were a bounce, you know, this is kind of an area that you would think it might possibly do that. So then I would want to go down into the smallest time frame, which would be the daily, and this is where I would be looking for my entry. So yeah, you can't buy it here because it's under the 30-day, but the 30 RSI. But tomorrow, if it were to close back above the 100, close back above the 30, that would be an excellent entry point and a good risk to reward ratio. Let's take a look here. Is the market falling off a cliff? S&P has started to go negative on the day. All right, so Microsoft opened higher, reversed. Not interested in Microsoft here. Netflix. So Netflix is okay. I mean, we had earnings today. We've gone up on the earnings. We did close back above the 50-day and back above the 50 RSI, which is positive. I would consider buying Netflix if we closed above all these moving averages. I would certainly consider it, because then my stop would be any close below the 50. So it would give me a small loss if I'm wrong. And, you know, the risk to reward, you know, if I'm wrong, if I bought it right here and it closes here, then that's a small loss. Doesn't mean it would close there. It could close here, but my reward might be back up to here. So I'm going to consider Netflix, and we'll see if it closes above all the moving averages. All right, Nike we already talked about. Bought this here when we broke above this previous range, this fractal, and MACD went positive, hit one profit target today. So this is fine so far. Philip Morris, just kind of putting along there. But we have earnings coming up, so, you know, close below the 50 and above the 50 wouldn't be bad. Wouldn't be bad. But we have earnings, so I'd rather wait till earnings got past earnings. PayPal was up earlier in reverse. Seems like the rest of the market's done that today. So, yeah, nothing there. Need a pullback. It probably at least to the 20-day EMA right here, and a V1, V2 to get me back in. QLD, that's the double leveraged NASDAQ. Yeah, nothing there. Same thing for me to get involved in here. Probably at the minimum V1, V2 entry off of this 20. Square losing its 200-day. You see it moved sideways. It was able to hold that 200, but now it's moving sideways and possibly close below the 200. I might be interested if it does close below the 200 and we have some type of nice reversal bar, strong reversal close back above the 200 in the coming days. That might be a possibility, but not now. SSO, this is the double leverage SPY, opened up nicely, reversed, 67 RSI. This doesn't look so great, so nothing there. TLT is kind of interesting here. You know, we had this nice run, moved sideways, we've moved down. If I could get a close below the 50 and then a close back above the 50, I would take that trade and then use that, and use the close above the 50 and then use the close below my line in the sand as my initial stop. So if I'm wrong small, but if we're able to swing back up, then I have a good risk to reward ratio. So not here right now. I'd rather see this close below the 50 and then back above. Tesla. So we were talking about V1s, V2s. This is a V2. This is a pretty good V2. We moved sideways, we stabbed down, we reversed, we're closing back above that previous bar. The only problem with this is, one, we're under the 200-day, which gives it one strike against it. And two, you know, going from a low RSI, see we're at 46 right now, most likely 50 is going to be our first spot of resistance. So I'm not going to buy this. I'm not going to buy this. I just don't, you know, generally if I'd have bought down here, I would be getting out at the 50 RSI if it didn't hold. And we're so close to the 50 RSI right now that the risk to reward is small to the upside and larger to the downside. So it's just generally, yeah, Bruce, you're right. If you'd have taken the V2 intraday, that'd have been good, but you would have got it at a better RSI. I mean, it's much higher now. So yeah, I'm just going to let this one go. I mean, we're running into this downward sloping 20-day moving average. So who knows, could go up, but I'm going to let that one go. But this is a good example of a nice V2 where we move sidewards, we stab down, the market rejects it and reverses back up. It's a great example. UNG, whew. Yeah, that's just a one-way train on the downside. We are at a 31 RSI. Now, you know, if we had a double bottom here with the divergence, I probably would take this trade at the close. And if we had a close below 30, I would just get out. So I would limit, you know, I've had a small downside risk, because the 30 would be my line in the sand. But we don't have a double bottom or anything else that would make me want to take this trade. You know, when you're buying low 30 RSIs, they're dangerous. And if you're going to do it, you're better off having 2 or 3 other supporting things, like a double bottom, you know, bullish divergence, possibly, you know, at the 6 ATR channel as well. But right here, it's just not enough. It's just not enough for me to take a stab at it. Let's take a look here. Whoa, boy, look at that. Earnings, people liked it, then they did not like it. Again, this is at a 30.48 RSI, so, you know, it's holding that 30 level there, which is good, but there's no supporting other technicals that really get me excited about this. If there was a recent low here, we were testing that low with the divergence, possibly, but yeah, I just don't want to get involved in that. Oil is hanging above the 200, which is good. You know, we have an upward sloping 20-day moving average here. We just had a crossover. We had a 2200 crossover, which is a good sign. But in order for me to enter in a position trade on USO, it would have to be a close under the 200 back over. I'm sorry, a close over the 20, a close under the 20, close back over the 20 with the V1, V2, ideally. Dollar is just range bound here, moving sideways. You know, if it moved down a little bit, we had a nice stab to the downside and reversal back up. We had a nice V1 or V2 in this area, in this between the ATR channels here. That might be of interest. Visa looks like it lost at 70 RSI. Just like there's support at the 30, generally there's buyers at the 30, there's generally sellers at the 70 RSI. So if looks like we were above the 70 today and reversed, so it's not a great sign. I'm not going to be buying this. The VIX, you know, we were below 30 intraday. Now we're above 30. We're at the 3rd ATR channel. That's not too bad. That's actually not too bad right there. It's a good example of going below 30, back above 30. And normally I said just that alone is not enough, but at the same time, it looks like we're a close below the 3rd ATR channel and possibly a close back above. I'm not going to touch this, but just as an example. Verizon, just moving on sideways here, isn't it? We have earnings coming up, so chances are this thing is just going to move sideways until we have earnings and give this some kind of direction. But you know, this is a good example of moving sideways. If we had a stab down tomorrow and a reversal back up with the V1 or a V2 entry, that would be a good setup. But we don't have that right now. XLE, this is the energy ETF. It's a 57.97 RSI, so you know it's positive, neutral to positive. If we have a close back above the 200, I would consider it. I would consider buying this at a close back above the 200 because the RSI is not too extended, and it's within my parameters of 50, 60, maybe sometimes to 61, 62. But close back above the 200, I would consider this. Bruce, look at real estate. Bruce has heard me Bruce has heard me talk about shorting real estate for the longest time. For about the last 3 weeks, I've been bearish on it and bearish on it and bearish on it. And specifically, the reason I was bearish is here we made this high. Now we make this higher high up here. But you see the MACD, see the strength of the MACD, and then here we make a higher high, but we have no green. Even though we've gone higher, which means it's running out of momentum. Darn. Look at that, Bruce. So anyway, I think it's probably a little too late to short here. Best thing that could happen is we move sideways for a few days, stab down below the 50, back over. Jeez Louise, look at XLV. Yeah, that was a big, strong move down. So yeah, healthcare is definitely not in favor today. So, you know, in order for me to look at this again, I'd have to have this kind of move sideways for a while, work off some of this sell, just let it settle down. At the very least, I'd have to get back above the 200. And then transportation has held over the 200 right here. If it could come down here to the 200, close below, close back above V1, V2, and that would give me a good entry with a good risk to reward ratio. If I enter here, exit here, small, and if we go swing back up and test that top, gives me a better risk to reward. Okay, so really the only thing I see today is possibility of Netflix with the close above all the moving averages. I guess we are there. But you understand, if I were to buy here, you know, my hope is it's going to continue up. But if I'm wrong with the close back under the 50, then I'm wrong small with the potential of being right big. And we are above the 50 RSI, which is positive, and above the 50-day moving average, which is positive. We are slightly under the 20-day moving average. So we have 13 minutes left. So we'll have to see. That's a possibility. And then AMD, let's see, the earnings are on the 24th. The 24th is a week from tomorrow. MACD went negative here. Well, that is, you know, that's a legitimate trade. That's a legitimate trade. Now, the question is, where would my stop be? My stop would most likely be either a close under the 10-day or a close under halfway of this bar. This is the washout bar. It washed out this previous low, reversed. So pretty much a close under the 10. But you can see it gives a good risk to reward ratio. If you're wrong, you know, you're kind of wrong here. If you're right, you're kind of right distance. So the risk to reward's pretty good. So our potentials for the day are Netflix and AMD. And of course, our SPY, the buy at the close, sell on the open. So that's just a standard. Okay, take a look here. You know, in these last 10 minutes or so, I'm still here, but I'm having to do a little bit of math and place my trades and so forth. So if you don't hear me speaking all the time, you'll know why. All right, let's look back at our current positions before we make any trades. So the 5-day is at 157.11. So that moved to 157.11. So yeah. So essentially a close below my entry price here, I would exit the trade. Coke has rallied back nice. LMT, good thing I hit the profit target when I did, but that's still fine. Nike is still moving up. SPY, we got in here yesterday at 289.95 and got out at 290. So it looks like we'll be buying back here at the close. So the close there was 27.85. So as long as I have a close above 27.85, we're going to buy AMD. And then let me put Netflix over here. So currently it's under the 20-day moving average. Let's take a look here. Let's take a look at this intraday, see what's happening. Yeah, I think as long as it closes over the 50 RSI and the 50-day moving average, I'm gonna buy that at the close. So our two potentials today are AMD and Netflix, and that seems like about it. Not a lot of things out there to buy. You know, we've generally been a little overbought, and seems like we're coming down now out of that overbought range. $27.85. We're just right on the button right now. Right on the button. Always makes it a little bit more stressful at the end of the day, because you try to get it as close as you can to the end of the day. So that's within pennies. That's not within pennies. 359.39. 359.39 is the 50-day moving average. So that's kind of the key to watch there. So I think what I'm going to do is I'm going to go ahead and enter my SPY orders, because I have a feeling we're going to be busy towards the end here. And I trade several accounts, so I have to do this over and over.
Order filled.
Okay, there we got one. Gonna go ahead and buy here. Okay, good. All right, so my SPY's taken care of. And my SPY's taken care of there. All right, so Netflix and AMD. You know, this is a good time to bring up, you don't want to have too much of a concentration, you know, of technology of any one particular industry. You know, Netflix and AMD are both technology, but they're a little bit different in that, you know, compared to like if AMD and Intel, which is pretty much a direct correlation. So as a general rule, I don't like to have more than 20 or 30% of whatever I'm trading. You know, if I was trading with $10,000, I probably wouldn't want to have more than $3,000 in any correlated industry. So, you know, Netflix and AMD they're close, but they're not exactly in the same group. One's a chip and, you know, one's more like entertainment, but still technology. All right, so AMD is going to be really close there. We're right on the button. Let's check back in over here. Okay, Bruce, sounds good. Have a good trip. Drive safe. Okay. So we'll be watching that. So those look okay so far. I think what I'm going to do, because Netflix does look like it's fine, so I'm getting close here. So I'm going to go ahead and I'm going to enter in my order for Netflix. over here in one account.
Order partially filled.
All right.
Order filled.
All right. And then over here. Okay, so I entered in my Netflix order. Now the other one that I'm going to have to wait till the very end is AMD. So let me put my order in for that, my little bit of a standing order. And then we'll just wait it out till the last second and we'll see if we can get it right at the end. All right. And that is okay. So I've got both of those trades chambered if need be. And right now, yeah, looks like AMD's fine currently. And we'll see what happens. Kind of been watching Merck here to see if we can close back above. Let's take a look here. All right. Gonna be close. It's within 3 cents right now. All right, so we did go long Netflix, and we got into Netflix at 360.59. 360.59, exactly where it's at. 360.59. All right. AMD, let's see what's happening. So we need to close over 27.85. All right, how long do we have here? We have 2 minutes. Probably the most stressful part of trading for me is this last 2-3 minutes where I have several trades that I'm, looking at taking, but they're just right on the button. And, it's sometimes you just do the best you can. Sometimes, you want to buy and then you don't, and then it actually closed 1 penny above. You're like, oh, but, it's just one of those things with trading. You never quite know. All right, we're closing in on 1 minute left. Take a look real quick at IWM. No, that's fine. Coca-Cola's fine. Yep. All right, AMD. All right, almost 30 seconds left. $15 seconds left. It looks like it's going to be okay. We're going to see. It's just one of those things. You just have to do it, and that's it. All right. So we got filled on AMD
Order
at
cancelled.
2793. Exactly where it's at. Okay, well, that's a wrap. Market is closed. Had an update today again, which is always nice. And yeah, glad the market's closed. So is there anyone out there that has any questions or anything you'd like me to take a look at some charts or a stock, or you have any questions? If you do, please let me know, and this would be a good time to do it. You know, this is a new channel, so we don't have a lot of active watchers, but it is growing, so I appreciate that. And, you know, while I'm waiting to see if there's any questions, I did want to remind you that I do offer private one-on-one teaching sessions via Skype during the evening time. So, you know, if that's of interest to you and you want some personal help, more than happy to do that. My hourly rate is in the description of this live stream, and then my contact information is in the About section of my YouTube page. So feel free to reach out to me, and if I can help you, be glad to do that. Let's see. So it doesn't look like we have anyone with questions right now, but maybe you'll have them tomorrow, and that would be great. I'd be glad to help you with. And just want to remind everybody that Friday is a half day. Because of Good Friday. So anyway, before we go, I'm going to have to do the disclaimer at the end here. So I appreciate everybody coming by today, and hopefully something on here helped you. And hey, if you enjoyed it, you know, please do me a favor and subscribe or share it on social media or hit the thumbs up button. I would appreciate that. So thanks a lot. Hope everyone has a good day, and we'll talk to you tomorrow. Bye-bye.
U.S. Government Required Disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.